JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 9th of February 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, the first one on the pickup here is Nikkei 225. So just a quick update. I talked about this one, and basically we've reached my target, the 29,519 zone. And just to show you what I was talking about here, this 29,519 is the lowest point of May of 1990, guys. So we have traveled quite a lot here. I mean, don't get me wrong, it would still the index would still require a lot of moves here to the upside in order to kind of, let's say, reach the all-time high, which is the highest point here of January of 1990. So yep, for now we'll just take it as the low of May of 1990. Yep, that's a very good target which got reached. Now the big question here is, can we see a further push north? Now in a way, don't get me wrong, I mean, there is a possibility maybe to see a small correction first if this barrier here, if this hurdle continues to provide decent resistance. If it does, we could see that little corrective move lower here. Let me just adjust this very quickly. So basically something like this would be possible. Now don't get me wrong, we might see another maybe overshoot here above this 29,519, but if eventually it drifts back down, back below this hurdle, then yes, we could start maybe considering some lower areas. And by lower areas, I mean the highest point here of January near the 28,979 zone, or this little tentative upside line here. Now this one's drawn here from the low of the 30th of October. Again, don't get me wrong, it is a little bit tentative. That's why I mean, maybe I would start looking at some lower areas just on a break of this hurdle here, this 27,600 zone. However, I don't want to miss out here on any good moves, so maybe I'll start looking at some lower areas on a break of this 28,326 territory, roughly around here, marked by the low of the 4th of February. Because at the same time, this upside line would get broken and in a way could open the door towards lower areas. So once again, for the downside, preferably I would like to see maybe a drop below this 28,326 zone in order to aim for some let's say for a larger correction, because again, let's not forget that we're still trading above this upside support line drawn from the low the 19th of March of 2020. So yeah, guys, that's the kind of the game plan, but again, all eyes right now are on the 29,519 zone. Jumping into Shanghai Composite now, look at this beautiful explosion here to the upside, and yep, this is what I talked about yesterday. If you remember, yesterday I picked up on Shanghai Composite, and we still remained below this 3,544 zone. And what I was saying, that if you want to aim for some higher levels, wait for that pop above this area. Now we got the pop. We managed to move all the way here towards that 3,587 zone. Let me just get rid of this upside line here. And now the target is the 3,637 zone, marked by the marked by the highest point of January. And let's see if that area can provide good resistance again, because if it cannot, well, this will of course open the door towards higher levels, and it could open the door towards these highs that we saw here back in 2015. But again, let's move on this one slowly. This level, by the way, just to kind of remind you, the area where the index is currently kind of trading above this 3,587, that's basically the highest point of 2018, and we managed to overcome that today. So that's in a way kind of, let's say, a bit of kind of sprinkles a bit of positivity here for everybody, for investors. So again, like I said, we are at a very interesting spot. If the index continues to trade above this 3,587 zone, yes, I'll aim for some for the highest point of January. But if that gets clear, now that's where it could become very interesting for more buyers. Quick update on the German DAX. So yesterday hit a new all-time high. However, the index drifted back down, and it drifted back below this, below the previous highest point, below the kind of the highest point of January and the previous all-time high, and that area is around the 14,131. So the level that the index managed to reach, let me just quickly mark this one, there we go, was around 14,169 zone, or we can round it up towards the 70. I mean, the cash index did push a little bit higher, but that's fine. I mean, not much higher, but again, the most important thing here is the fact that the index kind of drifted back below this area. So what it means now, that in a way, if it stays below this 14,131 zone, the highest point of January, there is still, I mean, it kind of increases the chances for a possible move lower here. But if you want to be a little bit more on the safe side, you could wait for a drop below this 14,026 zone, just to kind of let you know that the cash index right now is around 14,037. So basically, we are not far from where we closed yesterday, but still above this hurdle. But if that gets broken, guys, I mean, well, I mean, that could open the door towards lower areas, so keep that in mind. FTSE 100, so a good move yesterday, however, failed to move above this downside line here, drawn from the high of the 11th of January. So in a way, kind of shows that this downside line is still something to keep an eye on, and something to watch. For now, I'll probably take a neutral stand, because again, I would like to see this index kind of getting out of the this little kind of squeezing situation, because the cash index right now is currently trading at around 6,511, below yesterday's close, but still within this little kind of territory, in this little apex, if we can take a look at this as a triangle. That's why I'm saying, like I said, for now, guys, I mean, we are keeping an eye on these two lines, the two sides of the triangle, and waiting for the perfect exit. Let's put it this way. Now, jumping into DXY, the dollar index here is pushing higher, and basically for now, the fact that it's currently trading near this upside line, it will stay a little bit more on the positive side, and of course, for now, it's very important to see which way this is going to go, because again, will the upside line together with the downside line provide good support, or will we actually see a break here and a drop below this downside line and below this the 90.60 zone, which in a way could open the door towards the lower areas. So that's why, guys, for now it's a bit of a tricky one here. As you can see, I have this arrow here as a curved arrow to the upside. That's my main scenario, but again, let's see if this is gonna work out this way or not. That's why I'm taking a bit of a neutral stand on this one. Now gold, of course enjoyed the weaker dollar yesterday. Yep, as you can see, they popped back above this 18.19 level, so the one that I talked about, and what I was saying to you guys yesterday, that if it climbs back above this, then I'll take a bit of a careful approach and neutral stand, as long as it stays here above this 18.19 zone and below this downside line. For me to consider higher levels, well, I would still need to see a break of this downside line and a push above the 1875 zone. This way more buyers could join in here, and yep, we could see this one pushing towards the 1907 or even above that. So again, it's an interesting spot right now for gold, yeah, let's take a bit of a careful approach, and if the commodity drifts back below this 1819 zone, I'll start looking at some lower areas again. Oh, by the way, in terms of the economic calendar today, let me just quickly have a look. It's not a huge, like eventful day today, but something that you could keep an eye on would be the short-term, the EIA short-term kind of short-term energy outlook. There we go. And that is basically the that's the Energy Information Administration. Basically, that's the information from the U.S. So basically, have a look at that one. That report gets released, I think it's biannually, semi-annually, if I'm not mistaken. So let me just quickly double check. Yes, I think that's the case. Okay, so yep, sorry, not I think every month that's getting released. So so yeah, do apologies on that, guys. I mean, just kind of need to refresh my memory on that one. Anyway, keep your eyes on that one. That kind of shows some forecasts in terms of the energy market. So yeah, that would be a little bit more relevant towards my next instrument that I wanted to cover here, and that's WTI oil. Now look at this beautiful move here. I mean, we've managed to overcome this 57.40 zone, the one that I talked about previously, and now, as I said to you yesterday, guys, if we clear that level, next target is the high of the 20th of January of last year, and that area is roughly around the 59.61 zone. So you can see the strong move here. And in a way, for now, it seems that everything's kind of looking quite unstoppable here for oil. However, still be very careful. I mean, it looks that it could continue higher, but again, let's see how everything kind of goes ahead. But in a way, I do understand that sometimes it's difficult to track every little kind of news event, news alert, but keep your eyes on those, of course. And from the technical side, what you could do here is basically you could keep an eye on this little hurdle right here, this 57.40. So previously I looked at it as a good area of resistance. Now it could be seen as a potential maybe support zone, so which, if gets broken, could open the door towards a bit of a let's say a larger correction to the downside. So again, keep that in mind. For now, I'm aiming for that 59.61 zone, but again, if the commodity reverses sharply to the downside and drops below the 57.40, then yes, I mean, we could consider maybe a bit of a larger correction to the downside. Now, of course, the the culprit of all the news yesterday, Bitcoin. I mean, look at the move here we had, and it popped higher. It overcame the highest point of January, the previous all-time high, and well, I mean, it hit a new all-time high. Not only yesterday, but today already as well, hitting the 48,277 territory, guys. I mean, that is just insane. And of course, as you probably read the news already, I mean, the kind of the cause of that was Tesla, or should I say Elon Musk, who kind of poured a lot of funds into Bitcoin, and yeah, that kind of resulted in a huge move here to the upside. So yeah, for now, guys, I mean, let's keep an eye on this one. I don't think that this is the end. Maybe we're getting closer to that 50,000 mark, but again, let's not overcomplicate things here. In terms of the upside, I mean, it's a very, very tricky moment here for the upside, but in terms of the downside, if you want to aim for some lower areas, of course, I would prefer to maybe see a drop back below this hurdle, this 41,969 zone. However, if it starts maybe moving below today's low, which is around the 45,600, now maybe this is where we could go for maybe a bit of a larger correction to the downside. However, again, be very careful on that one. And I can see a question here from Klaus. I mean, next high for Bitcoin, I'm assuming. Well, again, like I said, my target is currently maybe around 50, but the one thing that you could also do here on Bitcoin, let me just quickly maybe jump into a weekly chart. Maybe this will be a little bit easier. But what you could do is just let me grab one of those Fibonacci Extension. Now that's a useful tool when trying to kind of figure out where the next kind of ceiling could be. So we're taking it from here, from the kind of the recent kind of, well, I wouldn't say recent, but from this low, and if we drag it to the dip, after which the reversal kind of happened to the upside, and we'll see that we are approaching this 48,831 zone, and that's the 61.8% retracement on the Fibonacci. So this could be a nice area to watch. For now, probably I'm going to stick to that area. I mean, above that we do have the 78.6%, and that's roughly around the 54.214 zone. However, I mean, that could be maybe too strong of a move here. Maybe again, we will see. I mean, this one is a bit of a sometimes just kind of chaotic and random moving, but yeah, for now, guys, I mean, that's what you could do here. I mean, if you take it from here, for example, from this low, from the low of the lowest point of 2020, if I'm not mistaken, yep, the lowest point of 2020. If you draw it from here, then you'll see that we are actually right now near the key resistance, which is around the 48,000 mark, and the next target is at 61.8, would be around the 52.493, so roughly around here. So again, that's what you could keep an eye on here. I mean, you could draw, if you draw it this way, again, it's all subjective a little bit, so yeah, I mean, you could just use it as an additional tool. So if you draw it this way, then yes, we are near that key resistance already. But if you take it from the low of 31st of August here, then you'll see that we still have a bit of room here towards where we could move towards the 48,831. So again, you'll be the judge, guys. I mean, I'm here to kind of show you your options. Now, that's in regards to Bitcoin. Jumping into a few pairs very quickly before I run out of time, because my colleague is stepping in after me here. So AUDNZD, so good move here, broke this downside line, and yep, it's currently showing that it seems like it's willing to kind of move higher. It seems that this could be seen maybe as a possible flag here, but again, in any way, I would still prefer to maybe wait for a push and not above this 1.0669, but I'll raise that a little bit and I'll capture this little area. And that's the high of the 2nd of February, or in other words, the highest point of February currently. This area is around the 1.0677 level. So if we get a nice pop above this, first of all, this will confirm a forthcoming higher high, create a new high for February, and yep, maybe we'll go back to these January levels here, and then yep, we'll take it from there. So for now, basically that's the game plan. I'm keeping an eye on this 1.0677. I would need to see that push above it in order to aim for some higher levels. If I'm not going to get that, I'm really not kind of getting comfortable with the upside. USDJPY very quickly. Oh, by the way, Klaus, you're welcome. Yep, so USDJPY, as you can see here, this worked out perfectly. So basically what I was saying previously, that if we get a push above this 105.35 zone, my next target is going to be the high of the 11th of November, which is also the highest point of November, which also did provide very good resistance. And this level is around the 105.67-68 zone. Although we did get an overshoot here on the 5th of February, you can see yesterday this level held nicely, and the most important is that the rate fell back below the 200-day EMA and below the 105.35 zone. So this kind of opens the door towards potential further declines, and this is what I said yesterday. I said that if we get a drop back below this hurdle, that's what I'm going to be aiming here for. I'm going to be aiming for this 104.76 zone, which we already managed to reach. So everything's working out perfectly. Now the big question here is, can this push a little bit further south? Given that we're near this key support zone right now, I will take a bit of a careful approach. We might see maybe a bit of a rebound here or something like that, and if the bears are still feeling kind of comfortable, then yep, another slide could be possible, potentially bringing this pair towards this upside support line. So that's going to be my little idea for right now. GBP Aussie. Now, I talked about this one, and basically this one is a very tricky one at the moment, because we're near this key support zone, which is this upside line drawn from the low of the 7th of January. Now, I talked about GBP Aussie recently, and said that we'll have to wait here. If you want to aim for some lower areas, wait for a break of this upside line and wait for a drop below last week's low near the 1.7789, and then we could go for some lower areas, like for example this one right here, the low of the 20th of January near the 1.7584. However, if we see a nice rebound here and push higher, yes, great, we could start looking at some higher levels. However, as I've mentioned before, I will prefer to wait for a push above the current highest point of February near the 1.2024 and then aim for some higher levels. And finally, EURUSD. So this one's pushing nicely above this downside line. So in a way, great news, some positivity here for traders. And most important, yes. Now most important is will we continue pushing above this 21-day EMA? Well, we'll just have to wait and see here, because at the moment, yes, we have a break of this downside line. We have a push up of the 1.2059. However, if the dollar and index starts reversing back to the upside, guys, this move higher here could be seen as a false breakout. We had seen these before. You know that yourselves, so be very careful for now. So probably what I'm going to do here, I'm just going to wait. I'm going to just observe the price action here on the Euro USD, and I'll wait and see how this is going to end up trading today and where this daily candle is going to remain. If it stays above this downside line, yes, it kind of increases the chances for a further push higher. But if it climbs and stays above the 21-day EMA, now that's where I'm going to get a little bit more excited with higher levels. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I hope you found it useful, guys. And like I said, I really appreciate your comments, your likes, your views, guys. Thank you very much for that. If you want to catch my video later on, my trader's tea time, 13:30 GMT time, just a quick review of some of these instruments, some new ones, and then we'll take it from there, guys. So have a nice trading day, and I'll see you later. Thank you very much, and bye-bye.